All right, good morning, everyone. Richard here. Happy Monday and welcome to the Morning Bell. All right, before we dive into today's analysis, it's a quick reminder this will be a shortened trade week. It will have Thanksgiving, not us, the US, obviously. I'm here in South Africa. Thanksgiving falls on Thursday. Everyone taking a long weekend, likely. So we'll also not have a morning bell session on Friday. So it will just be today and Wednesday, and then I'll see you guys next week, Monday again. So, just take note of that. I think nothing really happening on the economic calendar today worth noting. I think the big one for this week will be Wednesday's FOMC minutes. That's at 2 p.m. EST. I think so. A lot of traders will obviously be waiting for that. Not sure if we're going to see sideways price action into that. It might be a bit of a subdued trading week start off with. And then perhaps see a lot of fireworks around that time. And again, anything interest rates or interest rate decisions these days, any of those decisions really make the markets move quite a bit. So that is round about it for, I think we've got flash services PMI a little bit early on Wednesday at 9:45 a.m. EST as well. But the big one again, Wednesday, 2 p.m. EST, FOMC meeting minutes. All right. I just want to check if my connection is working on YouTube properly today. It does look like it. Again, guys, before I look at the analysis, you got any questions, let me know in the chat box, and I'll be more than happy to answer that for you. All right. Quick look at the ES. First, want to look at the bigger picture. Still think that this recent bounce was potentially just a relief rally, potentially a B wave of a double zigzag or the secondary zigzag. If you look at this little diagram that I've drawn over here, very simplistic sort of shape or form, although on the way down, obviously starting in Jan, it's been quite rough. I do, however, still think that pattern-wise, in the bigger picture, that we might still see another wave lower and potentially then end a very large correction that, like I said, in my view, is not over just yet. So that being said, I'll have to see a break above these highs. It was set of, when was this on a weekly chart? Week ending 19th of August. We see a break above that, then I'll have to obviously consider that something else went on here and that we potentially bottomed for this year. But that being said, if you look at all these previous declines, and little relief rallies upwards, 61.8 retracement. Not necessarily it's going to happen again, but quite often you can have repetitive price action, right? Or patterns that repeat. 61.8 over there, and then when was it last week? Price touching the 61.8 retracement. So if we had to look now at a daily time frame with a black background, we've had this resistance zone here. That's at 61.8 retracement level, around 4,022.77 and 4,022.70. That's a retracement that price just pulled back into. And the upper end of that, we're around 4,069.5. We have this median line sloping to the downside, which previously acted as resistance over here. So price hasn't really reached that yet. When was this last week? On the 15th, I think that was Tuesday. Nearly made it and then reversed to the downside. I then said that we potentially could see support step in around about to 3,922 at the lower end to 3,937 3/4, give or take, on the upper side. Price pulled into it. This was last week Thursday. Reacts a little bit to the upside and sort of like hanging sideways now. So we sort of stuck, or the ES is stuck within that range. It's at Thursday's range. I still think that if you look at this move that started on the 3rd of November, that potentially was a 1, a 2, a 3, and whatever's happening here could still be a 4th, and then get another 5th wave higher to complete, potentially, I would say, an A, B, C. Where this was some sort of a leading diagonal for an a B wave, and then just a 1, 2, potentially a 3, 4, 5. That could very well be a case, or 1, 2, 3 support stepping in here somewhere, one more higher, and then potentially lower. That being said, guys, we always kind of look at where price is in relation to market geometry, as well as price pattern, wave analysis, etc., etc. So I will be proven wrong. Like I said, if price should break above these highs that were set here on the 16th of August, if that happens, then I would consider that at low is in. It does seem pretty far, but mind you, markets can move really, really quick these days, right? So it does look like a 1, 2, 3, 4, 5, potentially still up and coming. Again, I think probably after Wednesday, maybe even we'll have to see during Wednesday how the markets react. I mean, in mostly anything, crude oil, Nasdaq, gold, especially the dollar index, see how price reacts to the FOMC minutes. Maybe things are sort of baked into the markets already, but yeah, that could be a real market mover. But then again, if we get another bounce to the upside, I still consider that as potentially getting very close to ending that B wave before the next decline potentially follows. Right, if you guys are on YouTube, I'm getting a lot of spam chats here at the moment, mostly from dating sites and singles. I'm not going to read that out for you guys. It's unfortunate. I'll see. I have to block them somehow. But anyway, that does happen sometimes. So yeah, that concludes the year. It's going to be a quick update, guys. Not really much to say. Not much has changed since Friday. So we're sort of like hanging around and being support and at upper resistance zone. But from a price pattern perspective, I think another high is still possible. What will change my outlook here, that potentially calling this the end of the C wave that potentially ended last week on the 15th, if price would break below or test this area. I'll just switch on my magnet mode. A break below 3,867 without making a new high, and I'm going to call that the end of that potential B wave. This one over here, and that we might see that last and final move lower. Right, Nasdaq, same sort of thing, not really much happening, very tight range, although the range is even tighter on the Nasdaq. Same sort of thing, we've been thinking that we might also just been seeing a single zigzag to the upside, similar sort of price pattern than on the ES. Now the NQ is lagging a little bit again, but same sort of thing. Potentially not done with that last C wave, assuming that this is corrective in nature. Prices reach this upper resistance area, lower end 11,929, let's call it 930, and upper end sort of 12,024. Again, plus or minus. Price reacted from it. We got that area from where there's a confluence of a median line sloping downwards and also a median line sloping upwards. So that's quite often what I'll be looking at. It's quite often where markets find support and resistance. Then not far below this upper zone, we had this lower zone here, which acted as resistance previously. Also these areas we identified beforehand in this green box acted support. So very tight range. NQ stuck between a rock and a hard place. Again, it also here looks that if this was an A wave and this was a B wave, this has got a beautiful zigzag look to it, way cleaner than on the ES. But similar to the ES, it does look like if this was a C wave, that potentially was a three wave move to the upside. One, and this is lagging again on the NQ, which is really irritating me. 3, potential fourth wave with one more higher to go, potentially overshooting this area and then completing that C wave and then potentially seeing that last and final drop down to the downside. Again, I don't want to get it too far ahead of myself, but we always plan according to what price does. Would it clear these resistance or support zones, depending what direction we're looking at? And then you formulate to where its price might move towards. Again, also combining that with different pattern analysis. But that's why I'm currently seeing both ES and NQ. I do think there's a little bit of upside potential still left, but also just being very cautious that if that does occur, that might be the final move higher before the next drop lower resumes. And again, if I'm completely wrong about all these things, then I'm obviously looking at those previous levels as well that might would need to be overcome to make me start thinking that these declines, which I'm still viewing as corrective, has ended. All right, crude oil. So I'm looking at the January 2023 contract at the moment. And it is over here already. Why did I change that? No, that was foolish. But anyway, there we go. Crude oil, bigger picture. I was saying on, when was this, Wednesday or Friday, I can't really remember, when price was pulling back lower here, that this after a 5-wave sequence from this high week ending 17 June into this low week ending 30th September, that we potentially could see a move higher, which we did, although the secondary move to the upside, I would say the second and the third wave, potentially tracing out as an ABC. We'll look at the black background in just a moment, but price sort of missed an area of where we had confluence between this downward sloping median line and this upward sloping center channel line. Now we'll look at that in just a moment. And then a very strong move to the downside, especially last week's move, very aggressive. We've had this previous area where price just undershot this lower channel line, this blue line running to the upside. Again, these lines were on the charts, or my charts, for a very long period of time. They were not drawn after the fact. It's very cool to see how price continuously respect these lines. And sometimes when you do get what we call, in this case, an undershot below a market geometry line, you can run another line parallel to that, and quite often that can also act as support. So yeah, last week it reached that line, sort of now hovering at it, but it does look, with price declining so far, that we might see a move towards these lows set on the 30th of, well, week ending 30th September. Let me just switch to crude oil quick. All right, so sorry guys, I'm just trying to gather myself here because I've obviously had to read now all of these dating messages popping up here on YouTube. Thrown me off my game. Should I say it surprised me a little bit, but anyway. A lot of spam going on these social media things these days. Well, not these days, for the longest period of time. In any case, guys, here in September, week ending September, we noted a potential reversal zone prior to price reaching it on crude oil. It was a confluence zone between a lower median line and an upward sloping channel line. That same channel that I've showed you on the white background on the bigger picture. Had a strong reaction back to the upside. Price reached the center channel line, reacted downwards. We had this green little area for potential support. We moved higher. Projection was that price could potentially move or reach into the 94 sort of area to the 97.56. Now we got, that was again confluence between this center median line sloping downwards and again also this channel line sloping back to the upside. Now price pipped these previous highs. It was set on the 10th of October and immediately reversed lower. So that could have potentially been it. My only other explanation here is that this was potentially a 1. Where are we now? And that this is some sort of ABC. And then we're going to get that another move much higher to the upside to retrace a decent portion of this decline that we've been monitoring for quite some time. And I've been saying that we'll probably get, or might get, a very deep retracement of this move to the downside. And price only hit the 38.2. To the upside, we still have this, obviously, the 50 and 61.8. So if price were to break this low that was set on, when was this, the 26th of September, then I think crude oil's in for a way deeper decline. Just from a retracement perspective, this decline now, let me just try to redraw that, as reaches 78.6%. It's not unusual for crude oil to have very deep retracements, but with price coming so close to those previous lows and also sort of like breaking through this area where we had that confluence that I showed you there on the white background, it does look like crude oil wants to go and test these lows. So I think if it does reach this low median line again, I think there's a very good chance that it will actually just break and move below the lows of set in September, and then potentially move much lower. So again, I'm going to give crude oil another day or two. Hopefully by Wednesday we'll have a better idea of where price is. Again, if we move very strongly back to the upside, I'm going to start considering that this was just a B wave and that we might see even higher prices to the upside. And one reason why I'm saying that is because of this here. This looks like a double zigzag that moved higher. A, B, C, X, A, B, C to clear the Y wave. Now, if you have a corrective move that breaks a previous high, then quite often what that means is that you're busy with a C wave that might trace out in 5 waves, similar to what we're seeing in the bigger picture in gold, which I'll show you now. Meaning that this entire move over here could still just be corrective. Price won't then break these lows, but that there is an ABC combination, ABC to the upside and 5 waves to the downside that fails to break these lows, i.e. giving us in the bigger picture, let's say you get a move higher, a 3-wave decline, 3-wave up that generally normally just reaches a previous high or just extends a little bit above it. So you got a 3, 3, and then you get 5 waves to the downside. That fails to break these lows, then you get a move to the upside, just to make things a bit more complicated, but it is what it is. That is definitely a possibility. But, you know, I think we'll know very soon if this is actually the case. I think if we get another move or extension below Friday's low and perhaps even reach this low median line, which is currently at 76.06, let's call it 76. I mean, it's so close to these lows. That will negate this entire idea that it is a expanded flat. So yeah, very weak. At least we got the idea right that it could have been just an ABC. But again, this is what bothers me, this sort of 5-wave move here that we've seen to the upside. All right, that might give us a clue that we're dealing with a correction still, right? That might even move higher again. All right, let's quickly look at gold. There we go. I think gold also rolls on Friday, I believe it is. And a bigger picture in gold, and this is what I talked about, that expanded flat, similar to what we might be seeing in a smaller, obviously, view in crude oil. With a 3-wave combination for potential A, 3-wave combination for potential B, going very close to pipping these highs, and then a 5-wave sequence to the downside. Again, using this green pitchfork sloping to the downside was a shift pitchfork. Worked extremely well for acting as support and resistance. I mean, resistance there, support in these levels, support over here, and potentially resistance recently again after the strong incline that we've been seeing. Now, we've had a 5-wave sequence down here, and a C wave of an expanded flat traces out 5 waves, a 1, 2, 3, 4, and a 5. And that stage, and this was the end of July, we thought that was potentially it. Although I did mention that it was a little bit short for a C wave of potential expanded flat. Price moved higher and then failed again. So at that stage, we had to change the outlook. I'm still sticking that this could be an ABC, but in this case, that this last little area in this box over here represents this area over here, potentially tracing out as an ending diagonal, if that makes sense. So we've seen a nice strong move to the upside. I was saying first signs that this potentially could have ended as an ending diagonal for this little final C wave was if price should break above this upper channel line, which defines the, the downward sloping upper end of a potential ending diagonal. Strong move to the upside, right? And that was actually the week prior to last week. And then last week price reached this low median line to the T and is now moving lower. So assuming that this still is an ending diagonal that ended, we also had the 61.8 retracement level that's been hit once, twice, 3 times, using a fib retracement from these lows in, when was this? 17th of August, I think that was in 2018, very long time ago, to these all-time highs, obviously, in August again, 2020. And now, potentially, that whole entire pattern, although it's been taking very long, more than 2 years, potentially ended. Let's quickly switch to this time frame over here. So last week we identified a zone around about 1787. Let me just get rid of this retracements levels quickly. And the upper end, about 1800 plus minus. We had a beautiful move straight into it, and now 1, 2, 3, 4 they dropped this far. So you see the price just reached today this previous lower high over here at 1738. So my assumption would be that this potentially was, if this was an ending diagonal, that this was potentially the first wave higher, potentially getting a corrective move lower now to retrace a decent portion of this move, and then potentially much stronger move to the upside. Again, I'm still not 200% excited about this being ending diagonal, simply because of the fact that this last wave over here did not really move much lower than this previous low over here. Technically, that is still possible, that could happen. I was hoping for price to move into a much lower area. An undershoot like ending diagonals typically do, in this case a bearish ending diagonal, this under or this sort of channel line over here, and something like that, which is quite often what you see, and then see a move up. But it is what it is. We did project prices to go higher. It did reach the area we thought resistance might step in. We are seeing it drop lower, so my next assumption or plan of action is to wait for some sort of reaction to the upside. And if we do get, let's say, a little bounce that creates a lower high, moves lower again, then at that stage it'll be a matter of using my shift pitchfork again to identify a potential area where I think a correction might move. We might even want to use our retracement levels. See if there's a confluence between also this longer term median line that's sloping to the downside. Perhaps a 61.8 retracement, and then also those median lines. But now, it's too early days to say for sure. We might just see a reversal here and bam, back to the upside. Again, gold will most likely react to these meeting minutes that will be released on Wednesday. So yeah, are we going to see a strong continuation to the downside? We're going to see a bounce maybe before that and then a strong move to the downside again. Who knows? We'll just have to wait and see and recap things on Wednesday. But yeah, that's the 2 p.m. EST, I think. So it'll be way after the morning bell Wednesday. So let's see where things are on all these markets by Wednesday. And then we'll probably have to recap and see if we're still on the right path with the analysis side of things on all these markets that recover here. Guys, I've had a little issue with my data supplier. I have to go through a rigmarole of entering new username details and all that sort of stuff again. So I don't have data for the dollar index, but that should be working again on Wednesday. I'm going to get on the case today with support, and then I can show you where the dollar index is in relation to, the bigger picture as well. And that pretty much concludes today's session, guys. Thanks very much for watching. Before I go, if there are any questions, I'll be more than happy to answer that for you. But if not, then I'll catch you again on Wednesday before the long weekend. Right, apart from these lovely updating messages I've received on YouTube. It doesn't seem to be something from actual traders. So thanks very much for watching, guys. Again, I'll be back on Wednesday. Have a fantastic rest of your day. Until next time, take care and goodbye.